Hello traders, it's Samurai Trader here. Today I'm going to be giving you a recap on today's trading action on the NQ133 tick chart. Of course, these setups that we discussed today work on all time frames in all markets. So whether you trade Forex, the E-minis, CL, that is the black gold, oil, gas, it really doesn't matter. The setups are applicable. And there's three specific questions that I've received from some clients, and I just thought it'd be good to put them on the video so that besides a recap we can talk about them. Before I get underway, very quickly, if you haven't already subscribed to my YouTube channel, please do. And of course, email me if you'd like to know more about my trading programs, my day trading programs and swing trading. And very soon we'll get this live trade room up and running. There will only be 50 members in it. Please drop me an email if you'd like to find out more information as we get closer. Just before I do go to the charts and explain some of the setups, of course we need to mention the risk. There's always risk in trading, and that's why it really comes down to gaining a proper education. And as usual, use a simulator. You don't go to real money before you start, until you've mastered the simulator, I should say. Traders, I have in front of me 3 or 4 plastic folders, sleeve folders, that I refer to. That is, I have a very clean desk when I trade. I'm a sniper. That is, I'm waiting for the right setup. But here's a couple of affirmations that I believe work really well for me. I believe and think in terms of probabilities, and I know that by taking every trade that qualifies and by following my trading rules, the statistics are on my side. No clear trade, or sorry, let me say that again, no clear trend, no trade. I'm a sniper waiting for a trade setup that fully meets my trade criteria. Traders, as you become more comfortable with your trading setups, your strategies, and as you keep your daily diary and trade stats, and particularly with the type of setups that we use, we have a 75 to 85% accuracy rate. And what that means is it gives you a great deal of confidence. So if you do have a run of 2 or 3 losses, which is happens maybe once a day, we might have 2 losses in a row, it gives you confidence to stay with your trading rules and to stick with the strategy. Unfortunately, many traders are constantly looking for the holy grail. They move from one strategy to another. That is, they may do their paper trading, discover something that works well, start trading real capital, have a number of losses, they go back and try to curve fit it. That is, they start to fiddle with the rules again, and the cycle goes on and on and on. So keep your stats, keep your trade book. So anyway, let's get into this. So the market opened here, remember I'm working on Australian time here, so 23:31 or 30 is when the main market opens. We had a rally. I'm always very cautious traders in trading the first 15 minutes to 30 minutes because it goes all over the place, and quite often after it's been open about 30 minutes you nearly always see a market turn. But anyway, let me point out a couple of trades here. Well, we can see we had a very nice divergence trade here. We had a nice bounce off our 200 and the 89 down here. Now this is one of the questions that I've had, is I've been asked about standard error bands. Standard error bands, I call them SEBs. SEBs have been around for years. There are you can use them in so many ways. You can use them for pointing out possible changes in trend, and we can see it here, this particular band here. This is not my standard band that I use, traders. For those of you who have watched my other videos, this is a total different band. It does have a setting of 21, however, and you can see here it's very good at, you can use it for staying in a trade, exit when you cross and close on the opposite side. Likewise, you can use it for taking counter trend trades when you get a close on the other side of the band. And you'll see this, and if you stop and look at some of the trades on this particular recording today, you'll see how effective standard error bands can be. Now let me say this, traders, particularly those that are students of mine, as you know, we already have 12 strategies that we use, 4 or 5 real core ones. The SEB bands, once again, you could say, well, this is another strategy. Traders, don't stop what you're already doing. This is just another strategy. It's not the holy grail. It's not a magic bullet. It's just another good strategy that works if you trade it correctly. So we can see here, I'll leave these bands on. Now, the other thing I wanted to just bring up was I quite often will use a 34 EMA moving average on my chart as well. So let me just put that on because I've had a number of questions. Now this is the yellow line that I have here. Now the 34 EMA is used by traders all over the world, professional traders, and it's a great short-term trend indicator. You may or may not use it in conjunction with an anchor chart, and how it works is when you're above the 34, you're long in the market, and when you cross below it, you're short. Now of course you're looking for other indications, but for an example here, you wouldn't be taking any longs while we're going sideways and while we roll over. So the 34 EMA is used. It's great for 34 bounces, what I call 34 EMA bounces, and you can see them here. But likewise your 89 is good, very good as well, except the 34 will get you into other trades fairly quick because it turns a lot quicker obviously than the 89 EMA. So that's what the so you'll see at times I have the 34 up there. Visually it looks good. Now one of the things though, as you can see, my chart is now starting to look rather cluttered because of what have I got on here. I've got the SEBs on, I've got my zero lag, I've got the 89, the 200, I've got my platinum, I've got my short and long-term stochastics for a newer trade, and I've got of course the floor pivots. So for a new trader this can become a little confusing. So traders, work out what strategy you're going to use and only have the indicators on there for the particular trade setup or the type of strategy you're going to be trading. So moving along, we had a beautiful 89 bounce here. This one you would have actually probably been stopped out of. Actually you had a bounce initially here, and then you had some nice divergence and a bounce off for 200. So this one here was fairly short. If you're using the 34 as some of my pro traders do, you wouldn't have actually taken this trade, but you may have or may not. So you had a nice divergence trade there. You've got another beautiful divergence trade here. Now remember, with divergence trading, we're always after 2 to 1. That is, for every dollar we risk, we're after a $2 return. And so if you trade divergence properly, you should be getting around a good 70, 75, 80% strike rate. But once again, it comes down to being that sniper, that is to being really patient and waiting for the setup. Here's another little divergence we had up here, another standard error band setup. If you're waiting for your zero lag, you wouldn't have entered in until over here. If I remember correctly, that was also a T89, but it's also a pivot bounce. So when you get divergence on off a pivot, they're fantastic trades. So really watch for those. Look up the top right hand here corner we've got here. Let me just actually pull this down for you so we can have a closer look at this setup. Here we've got a mid pivot here, and look at this here. Once again, nice divergence off the pivot, and it fell down, bounced off the pivot, gave you some heat, but then it fell away further over here. But just a really good trade. Double bottoms, typical. We had a nice T2 there. Moving along, there's a few things I want to show you, so I'll keep it fairly quick. Now down here we had a T11 or a T1 in the direction of a rolling market. So when we get lower highs, it's a good indication what's happening. Of course, the market's starting to fail, it's starting to roll over. Then it rolled, we had a nice T2, a nice T2, and look at this 34 EMA. So you see the 34, how it's turned a lot earlier than your 89. Now there's one other thing I'd like to show you. Let me just get back this proper scaling, and there's something else I'd like to show you as a little trick, is how you can actually stay in a trade longer. Now many of you know I quite often work on a fixed profit stop. It's just my strategy. I have a certain strategy that I follow, my win-loss, I know my probabilities. But if you'd like to stay in trade longer, let me get this right, in some trades longer and pick up more points, what you can actually do, let me just get this out of the way for a moment, and I'll just pull this up. Apply an 8 EMA to your chart. So let's have a look here. This is an 8 EMA. Now an 8 EMA is an excellent trend indicator for the short term, and one of the rules, and let me just give you a little hint on this. To take a trade, the 8 EMA has got to be under the 34 EMA, as we can see here. So this is now you can actually use this as a trend directional indicator. That is when the 8 crosses through the 34. Now you can also see that the zero lag almost models the 8 EMA as well. The problem with the zero lag in using it for your stops, you can see here it's a little too tight, where the 8 EMA gives you a little more room to move. Now of course some may prefer that, but it's a little tight. Now here we're starting to go sideways. So by the way, you had a nice trade there, winner, winner, winner. Now with this one you took some heat, and it over here, and I think if I remember correctly, it went against us one tick. Remember, trading the NQ133, we always have our stop 2 ticks above or below your swing high. So our stop, for an example, if we were going long here taking a counter trend, would be 2 ticks below, 2 ticks above, 2 ticks above. So that rolled over and stayed over to here. We had a nice little trade here. We did have a stop out on this one here. However, for the newer traders, where you hear me repeat myself on this continually, is wait for the zero lag. It'll just keep you out of a couple of extra losing trades until you build your confidence on statistics. But sometimes you discount a bit of profit by waiting. But anyway, you can see here, if you had have jumped in as we did, we actually got stopped on this one, but then we had a really nice one here, a nice winner. So winner, stop out, winner, winner. So it was a really good day. Nice winner, nice winner. Now one of the things here as well, we can see some divergence trades that I've marked up. Traders, if you're new to trading, stay away from counter trend trading until you really get your stats up, because you know the trend is your friend till it ends, and it's just so true. Now we've got the Greek crisis on at the moment, and we could see some heave-hoes in the market. The volume was today, or tomorrow I should say. Today's market, we had some really good volume, but yesterday's market, we had a lot of chop yesterday. Once again, I believe it's because of a certainty in Greece I should say. So just be aware of that. Remember, you want to really watch that, and don't forget, always check your red flag news. Down here we had some all of these are great trades. Now with this sort of trading, you've already packed up your bags and finished for the day if you're a newer trader. Now how a lot of my clients trade is, once they hit a certain profit target, they're only willing to give back one trade before they call it quits. But some of these trends that you get, where you'll get 6 or 7 winning trades in a row, this is really where you end up with $1,000 a day per contract. They're not every day, because once again we don't get these great trends every day. Now getting back to the 34, we can see here the 34's turned over. You had a little trade there, but of course you're very close to what? You pivot. We also had some strong divergence. So remember, we want to be trading with the overall trend, and look at this 200. What I don't show on this particular chart also is I'm glancing over at my anchor chart, which is around a time frame around 3 times higher. Now I don't want to complicate this, traders, but your 200 EMA almost acts as your anchor chart. So if you want to keep your trading simple, just have a higher time frame EMA. What you might do is maybe make this a 250 or even 300. This way you can really simplify how many charts you're looking at. Now on the 133 tick, as you can see here, we've got tons of trading action, and one thing, where you get these divergence trades, it's what I call T19s. And let me just put my other bands on, if you don't mind. Let me just have a quick look at this here. Just want to remind it. Yep. Okay, so this is also a T89. Now T89 with divergence, with the trend, I mean, they're a 90% trade. Once again, go and do your own statistics. Okay, so don't take my word on it. Go back, do your back testing, then do your live testing on the simulator before you go live on it. But divergence trading with the trend, always take them, because it is brilliant trades to take. And remember, we're after 2 to 1. So we continue down here. We had a little pivot bounce here. This was actually a losing trade for us, but then we had a nice one up here. So traders, we had a great trading day, and of course come quarter to 6 a.m. in the morning here, we stop our trading anyway, so we stopped about here. So it was a fantastic trading day. So let me just recap a couple of things. Standard error bars, here are the standard bands that I use, and this is what I generally will use. But standard error bands, bars, I call them bars again, I'm sorry, standard error bands, let me just put them on again for you to see. Okay, they're in most charting packages. They're great, particularly, and here we've got here, and how it works is when you're in a strong trend, they narrow. Notice that. Sorry about this, traders. Let me just kill this phone for a moment. So we can see here, see how they narrow? So when you're in a really strong trend, they narrow. And pardon me, traders, and as you come to the end, as it starts to change, the bands start to open up, as you can see. So you get this narrowing, and this is where it can be really good as far as using to stay in a trade or extending your move as a target. Notice how it narrows, so you want to close over the band. Okay, so your exit would have been there. Now here on this one, your exit would have been here. Natural fact, in real life, most of us for our first contract we're trading would actually aim for the pivot. But if you're staying in the band here, I'm jumping all over the place here, traders, you're waiting for your close over. Okay, so here you're in, up we go, and you'd be exiting. So down here you'd stay in this trade all the way down, and your exit would be here. So you can see how when you start to get some of these good trends using the standard error bands, they can be very good. Also in using the 8 EMA for your stop, and you can see the 34, but the 34 is once again just another indicator. The 89 is also very good. The 34 will just get you into some of these trades a little earlier. So traders, if you'd like to know more about my programs, my trading programs, my training and my coaching, please drop me a line, an email, and please subscribe to my YouTube channel. Until next time, thank you.